kick us off today, it's my pleasure to pass the virtual stage to my colleague, our SVP of Research and Product Strategy, Charuta Fadnis, who will take us through a world overview research spotlight. Charuta, over to you.
Thank you, Pete, and welcome everyone. I am Charuta Fadnis. I lead research here at Phocuswright, and I am going to talk today, just a brief world overview on what's been going on. Now, 2020 is a year that we all want to put behind us, right? I'm sure none of us wants to rehash the negative headlines, the bad news. It'll be a happy day to say goodbye to the state that we're in today. But here at Phocuswright, it's our job to look at what's happening in the industry, positive, negative, and to figure out where we are headed. And that's what we've been doing this year. So I'm going to spend some time just touching upon key markets in Asia, what's happened there in 2020. I'm also going to give you a sneak peek into what's coming up from the Phocuswright research team in the next few weeks and months on the US and European markets, and we're going to look forward on that one. And then we're going to talk a little bit about the trends that our analysts have been following. And there are so many, but I'm going to touch on a few that really go across the globe and that we feel are going to be really important to recovery. So let's start off talking about Asia. And I'm going to touch on three markets here, starting off with China. Now, like the rest of the world, we saw that 2019 was a good year for travel across the globe, but growth was already slowing at that point. In China, I think we ended up 2019 about 2% in US dollar terms over 2018. A little more in local currency terms, about 7%. The online market, though, is growing very fast in China. And year over year in 2019, we saw an 11% increase on the online side of the market. And that pushed penetration up to just a tad under 49%. Well, the good news is in 2020, we've crossed that, and we expect to see online penetration in China get to that 50% mark. So that's a great positive on that market. Talking about market, though, and you can see, it's just a really sad state when you see that smaller bar for 2020. The Chinese travel market was impacted really early on. They saw the virus earlier than perhaps the rest of the world did. And so even though there was no official government shutdown of travel, the lockdowns in January and February really impacted the overall travel market, and volumes came down significantly. The good news on that front is that their lockdowns seem to have worked, and they've had very few cases in the last few months. And we've seen a big rebound on the domestic side of the market there. So in 2020, we project that the Chinese travel market will be just about half of where it was last year. And I know it sounds like bad news when you say, well, it's 50% down. But if you look at the overall global scenario, 50% doesn't look bad in relation to other countries. And there's also some good news on the capacity front. We've been looking at air capacity trends over the past few months. And in China, we see that capacity is nearly back to pre-pandemic levels. So there's an example, I think, there for the rest of the world to emulate in terms of how we can, control and recover from the virus. Looking at the total and online markets by segment, and so looking at the share by segment in 2020, what we see is that air is about 40% of the total market. And when we talk about market size, we're talking about gross bookings in that market, so something to keep in mind. Air is about 40%. China has a big rail segment as well that accounts for about a third of gross bookings. But when it comes to the online side, air is slightly overweight. So we see about 43% of the online market is airlines, and rail is a little more offline. And so it's just about sort of 31% there. Let's move on to Japan and what we see in the Japanese market. Well, same thing as we've seen everywhere else, where 2019 is actually slightly better in terms of gross bookings than 2018 was, and then a steep fall off in 2020. Now, the Japanese economy wasn't doing so well even before we got to the coronavirus. They were on the brink of a recession. The Olympics that was scheduled for this year should have really helped the travel sector, but of course that had to be postponed. And so we expect the Japanese travel market, with all of those, economic conditions pre the pandemic, we expect that it'll be about 54% lower in terms of gross bookings in 2020 than it was in 2019. And that brings us to about 48 billion in gross bookings in 2020. Online penetration continues to rise slowly, as it has been over the last few years, and it'll get to about 45% in 2020. At the segment level, hotels overall, we find are the biggest segment in Japan. The transportation sector is split between air and rail. They have a very strong rail network in Japan, of course. And so we see about 36% is rail of the total market. On the online side, not so much. There's still a lot of offline bookings that take place in the rail segment. But the Japanese train operators have been trying to push online, have been trying to push online reservations and ticketless boarding and all of that. And that's helped. So we see that from 21% online in 2019, we have actually grown to about 26% in 2020 on the rail side. And air, of course, is overweight. So we see 29% there. Hotels as well, 43% of bookings are online. Then there's India. Now, India has been really a good story for the last decade. 2019 hit it really badly. We saw two major bankruptcies. Jet Airways, which was a huge player in the airline segment, they stopped operations in 2019, and Cox and Kings, which is a large tour operator, also ceased operations in late 2019. So that really hurt not just the supply side, not just retail sales, but it also hurt traveler confidence, because these are large companies, and while they had been, murmurs of trouble, no one expected them to just cease operations. COVID. On top of that, the Indian government has really taken strong steps in terms of stopping air travel for a long time. And then now there are still some severe restrictions in terms of international flights. Domestic is starting to recover, but we'll end up with the Indian market about 56% lower in 2020 than it was in 2019. And these are levels that we haven't seen. The last time we were at that about 13.5 billion, which is where we'll be in 2020, was before 2008. So, that's a market that has been hit very, very significantly. In terms of share by segment, and we see that airlines are about 38% of the total, so still the largest segment despite Jet Airways and everything else that's been happening. And that's because all the other sectors have been hit pretty bad too. Rail has been a big portion of the Indian market as well. That's at about 30%. But on the online side, Indian Railways, the Indian rail operator, has really pushed for online bookings and managing travel through their app and website. And so we see 44% of the online market is actually rail, and only 29% of the air bookings are made through a website or app. Okay, let's move on, focusing on the future a little bit. So we'll talk about the US first, and that is obviously a key market globally. We all look at that market very closely. 2018, 2019, great years. We started off 2020 pretty well. The market in 2019, the US gross bookings were worth 400 billion, just over 400 billion in 2019. You can see the cliff, right? It just fell off this year. And we project that in the US, we'll see about a 61% fall in travel in 2020. So from a high of 400 billion will be about 157 billion in the range of that. And I should stress, these numbers, it is such a fast-moving, fluid situation that these numbers change with literally daily news. But we expect that that's the range that will end up in, about 61% lower in 2020. And on the recovery front, it will be a slower recovery than we would like, certainly. There's still so much uncertainty around vaccinations, around what government requirements and policies are going to be around travel. So even by 2024, travel will still be slightly lower than 2019 levels. We expect to reach around the 392 billion mark in 2024. At the segment level, because air has been so badly impacted, air is down about 70% this year compared to 2019. And because of that, we see that shift where hotels, which have also been badly hit, but not as much as air, actually make up a larger share of the total travel market. Over half of the total travel market in 2020 is hotels, and only about 32% is air. By 2024, we expect things to start moving again back in the direction of air, and hotels will be about 10 points lower than where we see them right now. So 43% versus 39%. And on the online side, the online market, this year it'll fall in line with the total travel market, about 60%. Air is was at about 41% this year, or will be at about 41% this year, according to our projections. And by 2024, that'll grow to 47%. So similar trends to what we're seeing in the total market, where hotels done pretty well this year, but it'll fall back. And then on the online side, we'll see the air segment improving in 2024. Let's turn to Europe. And Europe is, it was a marquee year, 2019, for Europe as well. It was at about nearly 300 billion in total gross bookings. 2020 is a different story. Europe has been hit even worse than the US. We expect European market to fall about 65% in 2020 from the previous year. So just over 100 billion in gross bookings. And even on the return side, it will be very measured and slow. And by 2024, we still expect that total gross bookings will be lower than what we saw even in 2018. Overall, from a growth perspective, if we look at the compounded annual growth rate, it's about 27% from 2020 to the 2024 period. So there will be growth, just not to the extent that perhaps we would like, and we'll certainly don't expect to see levels that we saw in the past couple of years returning till after 2024. Online penetration will grow. It's been growing slowly in Europe, and by 2024 will be up to about 60% is what our analysts are projecting. Now, when we think about Europe, of course, it's a bunch of countries. And so just from that perspective, the UK and Germany continue to be the largest markets in Europe. And about 40% of the total is made up of just these two countries. On the online side, it's a slightly different story. In the UK, online penetration is close to 70%. And so about 24% of the online market in Europe is actually the UK versus 19% for the total. Germany, France, the two other markets that follow are slightly lower in terms of online penetration. And so they don't form as big a proportion of the total market of the online market in Europe. And if we look at it by segment, then we see, again, this similar patterns to what we have seen, but air is at about 37%, hotel at about 39%, and rail 16% in 2020. And we'll see it shift slightly in favor of air away from rail in 2024. On the online side, not much change on the large segments. Air at 43% remains pretty steady. We'll see a slight uptick in hotel with going from 33% in 2020 of the online market to about 36% in 2024. Okay, so that is the market view as we see it. There is definitely, a recovery that is coming, but it will be slow because there's still so much uncertainty. Hopefully the vaccine news, very positive, will help. And we'll see a recovery coming, not just sort of in the US, in Europe, in Asia, but across the globe. And we will take a deep dive into Latin America. Of course, that's a market that you're all interested in, I know. We just released a report on the Latin America market looking forward, and Carolina is going to talk about that in a little more detail coming up later in the program. Let's briefly touch upon the top trends then. On the trend side, and I'm only going to touch upon 5 because I know there are so many, but there's so much to talk about here. So the first one, contactless meets crisis. Contactless technology has really come into its own thanks to the nature of this virus. Our research shows on the consumer side that people are really afraid of catching the virus, not so much at home, but when they're traveling, when they're in the destination, because they don't know the medical systems. They don't know, how to react if they're in a strange destination that they're unfamiliar with. And so they do take into account destination rates, infection rates in the destination when they are making travel decisions. And they are looking actively at technology that minimizes contact with others. So whether that's a checking in the lobby, what policies are hotels instituting in terms of distancing, payments, virtual payments is a big deal this year, and I think it going to continue to be. So I think this is a trend we all need to watch out for. It's definitely going to be ubiquitous. We're seeing biometrics play a bigger part in travel coming up as well. So contactless is definitely going to come into its own, even more so over the next few years. The next one, meetings and events reimagined. I mean, we are talking right now virtually, much though we would prefer to be together in person. But this is a trend that's going to stay because we've seen that, companies have seen some success with virtual events. They are looking closely at what can be replaced in terms of virtual versus in person. The corporate travel industry has really suffered in this pandemic. And there are going to be discussions that are taking place there. In fact, they're taking place right now around corporate travel budgets, what's necessary, what's the ROI of travel, And so this is a trend that I think we will continue to see. More hybrid events is likely going to be the future, at least in the near term. And then, companies will take some decisions around travel and what's going to happen there. We'll also see some local, travel. We've seen that recently. Domestic travel, local travel is pretty big. People are looking for uncrowded destinations, more rural destinations, close to home. In the near term, we expect to see that this trend will continue. Technology like keyless entry plays a part here as well. And so harking back to the contactless trend, the good news is travelers are still very much about travel. They say we want to travel. It's just that they'll be traveling slightly differently in the near term. Tours and activities, again, virtual. We're seeing a lot of movement in this area because travel, getting to a place is depressed, and tours and activities are finding ways to stay relevant, minimizing contact with others. And we think that while it's unlikely that, in the long term, we'll see a shift towards more virtual tours, there's definitely a part that virtual tours will play in this, in the travel industry. And then last but not least, future-proofing the industry and building back better. And this is really the discussion that is happening, that needs to happen within the industry. Will we go back to our old ways once things start getting back to normal? Now, at Phocuswright, we believe that there's a need and a desire to really rethink the normal post-pandemic, and we think there'll be some fundamental shifts in travel on the technology side. And so that is a conversation that's ongoing in the industry. We have to come together. We have to think about our approach to climate change, traveler experience, and we have to regain trust and confidence of the traveler and implement changes as we build back up again.